while US markets closed lower on Friday, and that meant, in fact, so much so lower that they ended the week with declines for the week. And a couple of reasons why that came about. Of course, the jobs report that came through was much better than anticipated, and that will mean that the Federal Reserve will have very little pressure in hiking rates. So markets saw that as a negative rather than a positive, and that meant US markets as well as European markets were lower in trade on Friday, and so much so lower that, as I did mention, they closed with weekly declines. Also, there was a Tesla email by Elon Musk which was leaked, which saw Elon Musk looking at a prospective 10% reduction in the workforce for Tesla, which saw, in fact, the stock also tanked nearly 9.5% in trade on Friday. We did see on Thursday that Jamie Dimon had suggested that there was going to be an economic hurricane coming through, and the effects of that will impact pretty much the banking sector as well as other sectors. So that also meant that there was a bit of loss of confidence that was coming through. We're also expecting, of course, the better than expected jobs report will see rates go up, and there is the critical US CPI inflation data which will come in on Friday of this week, which also markets expect largely to be in line with last month's inflation data. Mind you, last month's inflation data came in 8.3%, slightly off that 8.5% high. But this month as well, it's not expected to come down meaningfully. It's expected to come in at around 8.2% on a year-on-year basis, which will largely mean as US CPI inflation is expected to come in elevated. Anything lower will, of course, be met with some level of cheer by the markets. So moving quickly on to how US indices closed in trade on Friday at least, let's have a look. The Dow was down around just above 1%. The S&P 500 was down to around that 4,100 level mark, which is down around 1.6%, and the Nasdaq was down nearly 2.5%. Now, very close to that 12,000 mark is where the Nasdaq currently stands. When I'm looking at US futures in early trade today, however, they've gone up. So we've seen a bit of a reversal coming through, but it's only a bit in comparison to how much the US indices declined on Friday. US futures are only slightly higher. They're around a third to around 0.4% higher, which will mean that net they're still lower. But there is positive cues coming through definitely. When we're looking at how markets in Europe closed, 17 bips decline for the DAX, but other than that, the FTSE was down nearly 1%, and the Stock 600 was just down just 0.25%, but lower nonetheless. But when we're looking at the way Asia has opened today morning, there's definite positivity. Asia has opened higher with the Nikkei up around 1/3%, so is the Shanghai. The Hang Seng is up around 2/3%. The SX is the only index clinging on to some level of losses, down around 1/3%, and the Kospi is up around 0.5% in early trade today. When I'm looking at the SGX Nifty as well, it's down around 1/3%, but it's off the lows. So all Asian indices in early trade were trading lower than, or rather were trading with cuts, but that move has reversed, and there has been a bit of positivity coming through and a bit of a reversal coming through. Moving quickly on to commodities. Commodities, especially oil, continues to remain under pressure. Oil is now very close to that $120 a barrel mark, and this is largely on the back of lower than expected increase in the production which the Saudis and OPEC have announced. So of course, Russian sanctions meant that OPEC was willing to increase production, but not as much. Also, there has been a decline in US stockpiles, which will put pressure on supply and will continue to be the case. So oil has on the back of that gone higher. When we're looking at gold, though, gold has come off around 1% or so. Of course, the better than expected US jobs data is a contributing factor to that. With rates going up, gold becomes slightly less tempting to buy for investors. When I'm looking at the US 10-year yield, that's gone up around 2.94% is where it currently stands at. Of course, that becomes more lucrative for investors. And cryptos, which was off those 30,000 a dollar, at least that's where Bitcoin was, below the $30,000 $30,000 mark. Over the weekend, it's gone up to $31,000. So recovery being seen in Asian markets. That's how I would sum it up. And the SGX Nifty also off its low, so definite positivity in markets currently.